Hey guys, welcome back to the channel. It is May 13th, 11:23 a.m. It's a Saturday. Hope you guys are having a good weekend. Wanted to talk real quick about the market. Hopefully I can help some of you guys out that are looking for a market crash, and help you guys that are really bullish and kind of maybe temper some enthusiasm here and look at things from a little bit of a different perspective than what you're probably seeing on the broader aspect of, market analysis, etc., etc. I want to talk about the Fed too, and I'm going to talk about TVIX trading and volatility, and how it should be done, and what I'm expecting next week, and why I made a comment on StockTwits late in the day that I thought TVIX would close below 175 when it was up around 196. So let's start with the S&P 500 and what led me to believe that the market had topped the other day, and how people are getting channels wrong, and why the market just doesn't have to crash. It's a lot of people are saying it's a bear market rally. Well, I don't know that I would say this is a bear market rally. I would say it was a major correction with a retrace and a huge V market recovery, not economic recovery. Market recovery, given the structure of the market and the Fed and all the liquidity and things that we talk about, the retail investment, the retail traders piling into the market. It's some unique characteristics of this market that we've never seen before in prior history. And now a lot of those things actually made me believe that the market had topped recently. And I believe this is a definitive short-term top. I don't come out and say, has the market topped? And you can go on YouTube and 95% of the stuff you see will be, they're trying to use keywords and clickbait to get people to look at the videos saying market crash update, market crash this. I mean, they've been saying this since the bounce from 218 all the way up, and eventually they're going to be right. And it took them, multiple months before they were right. And now they're saying, oh, look, we told you so. And this is the beginning of the big decline. Well, the evidence isn't there yet. So my position, just in a nutshell, is neutral in the market here. But I would not be overly aggressive on my shorts. In fact, the TVIX that I had, I'd sold into it multiple areas. And I just understand how it works. And a lot of people don't really understand how it works. Let's talk about that for starters. So if you look at the prior video, we said that on Friday in the pre-market video that I do once in a while, I felt like the top would be around 308.90 to 309.20. And the reason I drew that was some of the channels that I look at. And I'm not a big person on moving averages. I look more into specific market channels. And those kind of guide me a lot better than moving averages and different candles and stuff like that. I don't even need to look at candles for the most part. I can look at channel lines and determine, in my opinion, which direction the market's going to go and where it's going to top out at. So my idea was that 308.90 to 309.20 would be the high intraday. And if you looked at that high, if you were into purchasing TVIX, you could have said, okay, I can start scaling in small, and I will start where Henry said, at 308.80, 308.90. And you would have been scaling in this level here. And the reason that this price rejection was so prominent was that we started out on a high. We had a big gap from where we closed on the prior day. So when you have a big pullback in the market with that much energy and velocity at the levels we were at, not from lower levels, but the levels we were at, closing, sharply down, and then you gap up the next morning, and you don't at least retest those areas that we talked about of support around 305 and 300. You're going to have some type of a pullback intraday that's going to be a test of where the market's at. So the TVIX purchase was here, 308.96. Any extension of that you probably could have added, because the chances of the velocity we saw with the advanced decline line and the levels we were at in the market breaking above a very important overbought channel in here would have led you to believe that, given the put to call ratio, given the over exuberance of the retail investor, everything was lining up for a market pullback. We just kept talking about this, saying We don't know when it's going to happen. Even in here, I was saying, not sure when it's going to happen. We have an extension of wave 5 that is a blow-off wave to the upside. We don't know what's going to happen, but it is a game of musical chairs, and when it does happen, it is going to be ugly, we said. And there you can see wave 1, 2, 3, 4, and 5 should have pulled back here. We always say wave 5 is the shortest wave. Really should have gone back here, but instead, nope. This is when the bears threw in the towel. The hedge fund said, okay, you want to play this game? Let's run this thing to the top, and we're going to pull the rug on you. And sure enough, when you start to break above a channel extension at this elevated level, coming into what we had as a long-term resistance area, based on our charting and how these lines came in, and we can show that as well too. Everything was just lined up for a perfect scenario on a massive pullback, and it had to do a lot with this pivot area in here on the SPY, and I don't want to beat a dead horse on SPY, but it had more to do with this little pivot area that we had coming in through here, and I forget exactly how we drew those channels. It might have been a more angular coming through here, but I did it in a prior video. And we said, I wonder if this is actually going to be, this is the energy line that we talked about. I wonder if this is actually going to cause a market top here. And this angle might be off here, but we talked about how many days under before the market fires back up. If you get 4 days under on the 5th day, usually fire back up unless you're going to have a continuation trend change. And we saw that. We couldn't get more than 4 days under all along this line. It was an energy line we talk about. We don't draw our lines on the bottom of candles all the time per se. And then we've had this blow-off extension that was almost artificial. We pulled back, we retested that line, and then that's the line we ground up to and failed at. So everything lined up perfectly for a trend change. But is this the beginning of something more ominous in the market? It's hard to say, but I can tell you this, that on Friday, when you saw intraday, and this is the thing that made me a little bit more cautious being a short, having shorted the market at the higher levels, was this intraday move that was a little bit of a rejection. So psychologically, we know that coming into Friday, 300 was a major support level on the SPY. So SPX 3000 was a support level. We knew that. So when you look at the chart intraday, and we're going to draw some Mickey Mouse line charts because we like to use those just for clarity, you can see that intraday, and let me pull this back a little bit, and we'll do a 2-day so we can kind of get a little bit better of the little bit of a look here with the after hours, etc. You can see that we went down and retested that area at 3,000 on this candle, and we bounced, okay? And then we retested it and we broke through. Now normally when a market makes that kind of a move intraday, you will have a back test. Not necessarily though, but if you have rejection of that line, okay, you break it, you pull through, you bounce up and hit it. Now you go back up through the horizontal support line. You should get rejection on a continuation move on the descending trend line. So you did get a rejection here, okay? But here, right back at 300 again, and I'm using this because it's more of an energy line, but right back at support at 300, that was your bear trap. That was where the bear said, okay, here it is. We pull back, we bounce and fail. We pull back, we break the prior day's low, and I was short here. As soon as we hit here and then pulled back and then retested it, I went short, but I knew this was going to be a very quick scalp because once we started to get into this yellow zone, I had to cover my short on SPY. Covered a little early, but it didn't matter. I made money and we were out. You get the bounce and you get the retest, we should have failed right here. This would have been a perfect setup or a close. Like I said, if we close below 303 on SPY, we wanted to see it close above 305, preferably 305.15. Funny, the number, the 305.15 that I threw out in the video in pre-market was literally right where we hit going into the close, and we got rejection there. So we know where the energy is at. We know the energy right off the bat, it's going to be 305 on Monday, right? And then we know the energy on this lower area is going to be around 301, believe it or not. And then obviously the 300 is what everybody's looking at, correct? And then below there, there's 296. The problem is that if you were holding TVIX into the weekend, hoping that, you know, the market's going to crash here like everybody's saying, I'm not sure that happens. And I'll give you a couple of explanations for why it probably won't happen, and a couple of things that surprised me on TVIX. So here's your back test of the descending trend line. We should have never pushed up through there. You should have had a continuation move here from the failure, back test or here, and then gone down into the close. We did not do that. In fact, we pushed up, we energy transferred back, and then fired up, closing up into the pivot area up here. This top candle area started making a run at that 305 and change, and then a little bit too much energy there and close there. So that's a big bullish statement intraday. We don't know if it's short covering because the shorts are probably piling in on this back test here, right, expecting us to fail here. And right here when we didn't fail, they're like, oh boy. And then we pushed up through this line and then back tested it again. Hard to say. So that's number one. Number two is your TVIX trade should be moving with your SPY trades intraday. You should be buying TVIX here. You should be starting to sell TVIX when you get down to that 300 support. Don't hold it saying, I'm waiting for the crash. That's not how it works. Understand too that TVIX is time and energy. Everybody's looking at the same thing. When they look at the market here on a 1-year chart, and the TVIX power moves are going to be way stronger at the high end than they are down here. So if you actually think that this move here in TVIX from here to here is going to be duplicated from here with that same incremental commensurate move on SPY down to here, it's not going to happen. You're not going to get the same type of move. So if we move from baseline 108, 109, where I was buying TVIX at, where nobody wanted it, and I could see the people were throwing in the towel on TVIX in the chat rooms, and I was starting to accumulate it and sell it in the strength and then buy it back and trying to hold it and trying to figure, where's a good place where I felt comfortable holding it. Once we started to extend up there, and I put out the video saying the market's top short term, I didn't say question mark. I said I think the market's top short term on the Fed day. That's the day you wanted to buy it and hold it. Okay, and that's where we have the overextension. When we overextend in channels, we fire back the other way. It's like a rubber band. Overextension, shoot back the other way. Overextension, shoot back the other way. Overextension, shoot back. We may shoot back down this way. Okay, so that's for starters there. Sell your TVIX according to your SPY supports and buy it according to your XBY resistance levels. This is not something you just buy and hold. Now, buying and holding it up here worked out great. Buying and holding it down here where your nearest channel support lines might not be so great. You might get lucky because we might break this line and start to trend lower. So that's for starters here. Let me remove these lines and show you another thing that I'm talking about. And actually, let me redo that. And I'm going to show you why a lot of people, their technical analysis is like a broken clock. It's only right, twice a day, like they say. But eventually they get it right. They've been talking about from here the market's going to pull back, and then from here the market's going to pull back. So they're drawing simple charts. They're taking bottoms of candles and doing stuff like this, saying, all right, right in here. Meanwhile, they're not even, if you look at a lot of these guys, they're not even capturing this area here. They're just drawing a channel line like this, saying, we broke, we're going to collapse, and they get that wrong. And then they draw another channel line from another candle bottom, and then they say, we broke, the market's going to collapse. And just like now, they're drawing another channel line saying, we broke, the market's going to collapse. Now, I will say this is an island top, and that is not a bullish sign. But does it mean the market is going to collapse? No, it does not. It could be the beginning of something, and we'll interpret that as the data comes in. And we'll decide whether we want to make a all-on full short and sell all of my longs. I bought stuff into this big drop, and I'll determine whether to let those things go depending on how the market acts on the energy. It's not going to be because of the economy. It's not going to be because someone says, oh, there's a second wave coming. You think you're the only person that knows that? And who the hell do you think is going to be selling here to make the market crash? They're just going to start selling. I mean, people that I know, and I talk to a lot of people because I like to gauge people's, when I talk to people and they say, hey, Henry, I want to get into the market up here, and they've never had an interest in the market, that's a red flag for me. That's when I start saying, oh boy, it's time to buy some TVIX. Now I'm interested in it. Now you guys are getting out of it and don't want it. Now I want it. Now everybody wants stocks up here. Now I don't want them. Okay, so this talk about the crash has to end. Then I'll be thinking more about crash. But when the Fed says we have a lot of tools in our toolbox, and you guys are thinking, well, they can't save the market from collapsing, bullshit. Bullshit. They can't save the economy from collapsing. but they can freaking save the stock market from collapsing. So this island reversal, I do not like this little action up here for sure. But does that mean I'm just going to go in, all in, and buy? Let's get this out of here because this is fucking irrelevant anyway. And this becomes more relevant, these charts, on higher levels of the market. It's just you have to understand when they become relevant. You got to stop using them, and every time we pull back in the market, oh my God, we're going to crash. Oh my God, we're going to crash. Oh my God, we're going to crash. It actually becomes more relevant the higher we go. Here, not so much. Here, maybe. Here, a little bit more because of a lot of things we talked about. I mean, when I look at stuff like Apple, and I'm going to shift gears here really quick. And I'm not to pick on Apple because Apple's a great company, but when we look at these channel tops in Apple, once again, your regular run-of-the-mill everyday technician is going to say, well, this candle here is, relevant. This is fucking not, I'm sorry for cursing. This is not relevant. These candles are not relevant. These are outlier days, okay? Just like you can't draw top of the market on Fibonacci on some complacent run we had in SPY at the beginning of the year. These are your channels in SPY and Apple. And Apple looks like it's hit a channel top. Now, I'm not saying it can't extend past that, but most people say, well, look, Apple made a breakout to an all-time high. This is a breakout. It's a short-term breakout, but this is not a long-term breakout. And I'll remove this to kind of give you some clarity. And this line isn't really the most horizontally perfect line. It's actually more something like this, but you get the idea. So when we say a breakout, yeah, it's a short-term breakout, but these breakouts tend to not carry a lot of follow-through because they're not coming from levels of strength. This is a level of strength in here. Okay, this level here is a level of strength. You have some time, right, and some sideways consolidation before you have a power move to the upside. This is not time and sideways consolidation. This is hopium and blow off to the upside, over enthusiastic retail trailers with common names that they only know how to buy. Okay, these aren't healthy moves. This is rotation out of certain stocks going into tech because they think it's immune from the economic downfalls and the pitfalls of the coronavirus. It's not healthy movement. So let me digress and get back to what we were talking about. But a little concerned about things like Apple when I see those channel tops, and not the tops that people are talking about. We don't want to see blow-off extensions of over-exuberance, whether it's in Apple or whether it's in the QQQ. But then again, I also see a lot of guys drawing charts on like the XLF saying, oh, once again, they're drawing these Mickey Mouse charts saying that, we've failed and we're going to crash. The market doesn't have to just go up parabolically or crash. There are middle areas of movement, and those need to be acknowledged as well. So just like on the S&P 500, and I'm just using this is an extension that shouldn't be there. I just wanted to show you. This is one of multiple channels, so don't think that this channel here has anything to do with this channel that we saw on the way up. Channels change direction. It's not just like, let me just draw a line from here and draw a line like that and say we had what do they call it, the narrowing wedge or whatever the hell it is. Yeah, I get it. Like we had that on the top, but not from the bottom. And these guys kept getting this wrong every time you see a big pullback from that narrowing channel. They said it was so now that was a narrowing channel. We talked about that. That was an overextension of a narrowing channel that we didn't like up in here, and that's the one that pulled back. And I know these are sloppy charts, but you get the idea. So that's my main concern, is that people are holding TVIX, expecting a market to drop based on the economy, based on a second wave. Don't act like you're the only one that knows there's going to be a second wave of the virus. We don't have any definitive proof of that, but it's kind of common knowledge that we're probably going to have some issues with reopening and people not following the guidelines. When you see people in Florida where I live, like idiots partying and stuff like that, and they don't really give a shit, and they're just out there and they're saying, hey, it's my time and whatever. Young kids that are probably going to be spreading it to older people that are more prone to having some serious health issues based on the information, the data that we're getting. So let's keep that in mind. Let's keep our economy separate from our stock market. If you think the Fed cannot save the stock market, you're full of it. They can go out and buy ETFs if they want. I mean, look what they did on the high yield bond fund. They bought the crap out of that. It's actually on their balance sheet. So let's not go chasing the market down. Let's be smart and wait for the market to pull back. I mean, you can see in the cues here, and these aren't perfect channels. I make perfect channels when I'm doing my trading, or try to make perfect channels. Nobody's perfect, but these are not. But you can see how they work, right? It's about energy. You can see how these certain levels, and you can see I was off a little bit, so we need to lower that. How that also became resistance on the top end. And we'll try to find out where the channels are on Monday. We'll come in with Monday saying, I think this is where SPY. And, usually we're right, but there's times we're wrong, but we adjust during the day. We adjust on the fly. It looked like the market might break on Friday, but no. I mean, so I made the call when we back tested that you should probably get out of your TVIX. And I got some crap on StockTwits because I said 180 at the open was a gift or pre-market. You should have taken it. Not that you can't go buy it back, but learn how to play the game. Learn how to play your TVIX trades based on movement. And you can see how I was trading it all day. I mean, these are channels that I draw intraday to help me make money on TVIX and not just buy and hold hopium. That the market crashes is not how we do it. So when the market opens up and we break this wedge on TVIX, then you can go long right in here, especially when I correlate this to where I think the market top is, right? And then you have a momentum line, right? Let's get rid of this. I'm going to confuse you guys, but you get the idea, right? This is the momentum line on TVIX, and every time you hit it, but then it back tests this line, and then you got to get out in here around 220. Now, can you go buy it back again? Yeah, but watch your SPY charts and where they correlate, because now you have a descending trend line, and then you start to wedge again. Can you buy here again? Yeah. And then you make the move to the upside, and then you hit this line, then you sell it. I mean, this is what we talk about. Then you have another descending line in here. They can't hold energy more than 1 minute over, 1 minute over, 1 minute over, and it starts to pull back, and then you start to pull away from it. Yeah, then you can go long there at 215. And then you're correlating. Here's one thing we talked about too, and I'll close on this. I was actually surprised, and this tells me a lot about TVIX, and we'll close on this and we'll do another video and talk about some other stuff. But I will say that I was actually very surprised that when we had a high on Thursday on TVIX of actually into the close of 206, and I believe that was the high. You actually got to 220 in aftermarket. Given the movement on the market just barely breaking the prior day's low of 300, the extension on TVIX surprised me. It did surprise me. And I will say that move told me that it was more of, and you guys want to bash on the retail traders, you bears do. Well, the retail traders were buying TVIX. These are channel extensions of TVIX that should be sold. Here's the gap down. This is where I was saying sell at 223. So do I miss these moves? Yes, because they are the moves that need to be sold. They are the fear reversal moves on the bottom end of the SPY. These are overextensions. These should be sold, just as the oversold areas should be bought if you're looking at the channels on SPY. So in closing, yes, I was surprised that we got up that high, that the extension move usually over time in volatility starts to lose energy. In other words, if we were to trade down to 3,000 again, or let's just say we were to replicate the low on SPY on Monday, you probably wouldn't get the 234 move, even though the prices were the same basically on SPY. You would not get that same move. As time goes on, just like people become complacent or desensitized to fear, it's the same thing in TVIX. So the extension of that move actually surprised me. I thought we would kind of just get a little bit over the high of the prior day of 209 into the 220s, and we got to 234. I thought 224 was actually going to be the high for the day. And I texted a few people that were trading it saying 224 is the number you're looking for when they bought down in here. 224 was the number. And then they're like, man, I left some money on the table. Okay, well, thank me now, because now it's 164. But who knows where we're going to open up on Monday. We could actually open up on TVIX at 206 if the market's showing some weakness. But understand the movements of energy and fear. It's like the antelope and the deer that's being stalked by the lion in nature. The deer is always at a state of homeostasis, of calmness. And the lion fires out, or he kind of feels the lion, right? He hears things. His level of fear starts to go up, right? We saw TVIX starting to creep up. The market was getting a little bit worried as we started to go higher and higher. That's a red flag in the market. When the market's moving higher and volatility is also moving up with it, we've talked about that over and over. That is a telltale sign something's about to happen. So the deer knows, and then the lion jumps out. The deer escapes. His level of fear is extremely elevated, right? Lion fires out, boom, fear up, and then he gets away from the lion, and his fear starts to go down. Then he hears another noise, and it starts to fire up, and then he's like, less noise, and he calms down. We're always pulling down to a flat baseline, right? And then we have these moments of fear. But over time, these levels start to go lower and lower and lower unless you have a market rapidly moving, breaking support levels in a short period of time. Okay? So you're like, Henry, well, why didn't the Fed save the market when the market was falling at the beginning of the year? Well, first of all, nobody expected that to happen. So usually the biggest moves you have in volatility are when things are unexpected. Now a lot of people are expecting things, okay? They weren't expecting things to appear. That's where TVIX made sense. Everybody was complacent, market's going to the moon. You know, the guy on Barstool Sports is saying trading is the easiest thing he's ever done in his life, and I'm thinking, oh my God, we're going to get smashed. And this is a definitive top, so this is something to play out for shorts. I think this is a solid top for the near term. Do I expect us to go back up and break that? Absolutely not. Absolutely not. Can we go back up and fill the gap? Maybe. Like I said, this is an island top reversal. We do not like to see stuff like this. This is not a bullish pattern. But, once again, you want to F with the Fed. Probably not the smartest thing to do. You can say the Fed cannot save the economy, but do not think the Fed can't artificially manipulate the market. And in closing, I know we said this twice, the Fed probably liked this move, and the Fed probably, in a way, orchestrated this move, because the Fed liked this, okay? They liked this recovery rebound that we saw, okay? They wanted some time for the market to kind of go sideways. That's the island top reversal I was trying to draw up here for you guys to see. We do not like to see this, what you call an island top reversal, where you just have a stranded area of charting and candles that are sitting by themselves. And that is not a healthy area like we see here. And then you have this gap in between here. So to fill that area and that island top reversal, which we haven't seen yet, and we see it, gap, pullback, and a normal lower level market, this gap pullback is an extension move to the upside. But on the high end, when you do have a possible top in the market, the gap from the island top bottom reversal is usually your resistance level for a while. So you want to play your shorts, then play them off of the 312 area. And if we get to the 312 area and hold it, not for 10 minutes, not an hour, we start to sit over there for a few days and grind. And then you got to start to think, this market may have some legs left in it to the upside. So, like I said, was anybody ready for that move here? Was the Fed ready? No. But the Fed probably orchestrated this pullback. They don't want a market bubble either, because they know bubbles burst, okay? So you don't think that they're going to manipulate and talk down the market. And now that they'll get it down, you don't think they're going to support it at some level. But if they have firepower, which they have a ton of firepower, they're going to use it judiciously, and they're going to use it intelligently, okay? They're not just going to start covering the market every time or supporting the market every time it pulls back. They liked this pullback. They loved this pullback, because it took a lot of these crazy freaking retail traders that are buying Hertz and bankrupt companies out of the market. They don't want to see that crap in the market. All right, trust me, they do not want to see that crap in this market. So here, you want to draw a Mickey Mouse chart. Here's one for the bears. It's something like this, I think. You can kind of draw it. Actually, it might have been like this. There you go. Ultimate Mickey Mouse chart was this one, I believe. Something like that. I don't know. The other day I was kind of toying with the channel lines, and maybe it was this one here, but you can actually make a channel line touch, somewhere in here. It's pretty funny, but you can actually draw the bottoms of these channel lines. Maybe it was in this one over here somewhere. I can't remember. But in any case, this could be actually a wider channel, believe it or not. And it may look something like that, but I'd have to explore those lines. We want lines of importance, and to me, this was an outlier candle. Was an overextension bear trap on the downside, just like these were overextension bull traps on the upside. When you break channel lines to the upside, it usually indicates a top. When you break excessive moves to the downside, it usually indicates a bottom. So I do believe the top is in for the market. Just like I said in my video, we can play off that, but let's not just say the market collapses from here, okay? Let's kind of use that area of energy that if we bounce, we can start using some trades, but we need to be cognizant that there is a big layer of support in this area right in here between 292 and 296, kind of in this area right here. We don't want to start playing that, right? You had a touch here, you had a touch here, then you ground along that area, and then you shot to the upside, overextended, and pulled back. So, for you guys that think the market's going to crash, get it below 294 for a little while, right? Because resistance, grind, back test, and move up. At least, get it somewhere in that area here, and this might not be a perfect line, but you get the idea of the tail of this line here. Get me something that breaks there for 2 days, and then I'll listen to you a little bit more, but then you're back into another layer. So I'm just going to leave it at that, guys. It's over. I'm overextending myself here. It's been too long, but use your SPY and your TVIX trades according to the movements that we see, and we'll have some more details later.